This week on the Retirement Quick Tips podcast, I'm pulling back the curtain and telling you exactly how I manage my 401k as a financial advisor. Today, I'm talking about how I invest my 401k. What do I have in cash, bonds, stocks, etc.? First of all, this is going to be very dependent on your situation. So, this is just my own personal investment strategy. This is not necessarily what I would recommend to somebody who is like 2 years or 5 years from retirement because it's pretty aggressive. Currently, I have 1% of my 401k balance in cash. I have a pretty negligible amount in international bonds. I have 4.94% in US bonds. I'm not even sure how I must have some fund that is holding bonds because I didn't intentionally purchase any sort of bond fund or own any bond specific holdings. See, I don't even know what I have. Okay. Then international stocks is about 18%, US stocks 75, almost 76%, and alternatives is also pretty negligible at 0.5%. So my 401k is like 95% in stocks and very little in bonds and cash, which is exactly where it should be because I'm 40 years old and retirement is still a long ways off. I want to maximize the growth of my 401k. And like many other 401k investors, I'm using mutual funds and what's made available to me in my particular plan in order to set up those allocations and invest pretty heavily in stocks and some international. If you dig a little bit deeper within stocks, most of what I have in my 401k is in large cap stocks. That's actually a change. I only have about 13% in mid cap. I have maybe 15% in small cap and then about 18% in international. So almost half of my investment portfolio in my 401k is in large cap stocks. And that's split. I have large cap value, I have large cap growth. And so what I've tried to do is because my 401k balance is not everything I have other accounts. I have a Roth IRA, which was a rollover from a previous employer that I worked for. And that balance is actually higher than what I have in this 401k account. And so that's invested a lot in smaller mid cap companies, some large cap, but I also have less international in my other accounts as well compared to my 401ks. What I try to do is use the 401k investments and the flexibility there because I can make changes at any time. I mean, I'm not day trading, but I can make changes to that and make sure that it's complementary to how I'm investing outside of my 401k. And that's a really important thing. A lot of people have overlap. They'll have the same types of investments, the same concentrations, the same problems in their 401k as they do with their outside accounts. And it's a great opportunity when you have a 401k and you can trade and invest tax-free to set it up so that it's complementing how you're invested outside, especially given its weight in your overall portfolio. Now, one of the things I want to address is why I'm not just in a target date fund. And it's a good question because a target date fund, I bet if I went back and looked at how my personal performance has been in the 401k versus a target date fund, I bet I've done a little bit better, but not by much, probably. And the reason is because the market since 2018, when I've been invested in this particular 401k that I'm in currently, it's done well over that time. The rising tide lifts all ships. And most target date funds are going to be invested broadly in the stock market, but they're going to look a lot alike. They're going to have the same concentrations because those target date funds, they're not going to deviate too much. They're going to have similar concentrations as the S&P 500. The S&P 500 is going to be the bulk of the stock portfolio. Some may have different allocations to international and small and mid cap, but I'd say the international allocation is really the only major area where many of these funds deviate. Most of them are highly concentrated in the S&P 500 and look a lot like an S&P 500 index fund, especially the ones that are more heavily weighted towards stocks, or especially when you look at just the stock component of a target date fund. And I have problems with that because the concentration of stocks in the S&P 500 is at a pretty extreme level. You have 10 of the largest companies that make up 40% of the index's S&P 500 index's market cap. And also, they're taking the lion's share of earnings. So there's a lot of risk in that. Now, it's been a great place to invest for the last several years because the returns have been amazing. But it's a house of cards if sentiment changes, particularly on the big tech stocks and particularly on AI. There's like this arms race with AI, and there's going to be winners and losers. And some of those companies that are dominating at the top right now, they're not going to be dominating in 10 years. And the only way that they come back to earth is big price declines. So I do have worries that a lot of these target funds, even though they're diversified, they're not as diversified as what you think. Because right now, again, the S&P 500, it's so over concentrated, and it's just gotten worse and worse as the market has gone up and up and up. And most companies have frankly been left behind with the AI arms race. So I'm trying to invest with the big picture in mind. I'm trying to maximize my growth and not worrying so much about the volatility. After all, I'm 40, so I don't really care much about that. I just want to maximize the growth and have that money work for me for hopefully at least the next couple of decades. Also, I want to use the 401k and the tax-free nature of that in terms of trading and moving money around to make sure that I'm well diversified and I'm balancing, especially where I might be more restricted. Because I have taxable accounts too, where if I have big gains and I want to trade a stock or sell something, I'm really handcuffed unless I want to pay a bunch of taxes. So I can use my 401k investments as a way to kind of balance that and make sure I'm properly diversified to the extent that I can be overall. All right, that's it for today. Thank you so much for listening. My name is Ashley Michike, and this is the Retirement Quick Tips Podcast.